All right. What's up, tycoons? What is up, traders? Super excited for today's video on Bone. Okay, we're going to break down Bone. We're looking at the daily chart. This was a viewer request. I do those viewer requests every single week. So if you want to see your ticker, your cryptocurrency, stock, bond, whatever it is in the next video, all you got to do is comment down below. And I'll be happy to make a video on it as soon as I can. So we're going to take a look at this possible five-wave structure to the upside, everything that needs to happen for that five-wave structure to play out. And then we're also going to look at the relative strength index and the MACD and how you can use these to help further understand price action. So just smash the like button. If you guys are new to the channel, subscribe to the channel, and we'll get straight into it. Please remember, none of this video is financial advice. I'm just going over data. The chart is nothing more than data. And I'm going to present a bullish and bearish scenario so that way you're covered on both ends. Hopping straight into it, we're looking to see if we're going to get this five-wave structure to the upside. Now, your wave 3, okay, which is the one that we just completed, it looks like this is typically your largest wave, right? The wave 3 is going to be the largest wave. And then your wave 5 and your wave 1 are going to be smaller than the wave 3. Okay, so we have some bullish price targets up here at about 1.80 and 2. All right, so Bone could go possibly all the way up to 1.0, or I'm sorry, 1.8 or 2. But there's a couple things that we need to see happen first. First off, we need to get past our breakout level here in blue, right? So the breakout level is in blue. It's a blue breakout level of 1.6162. That's going to be our breakout level. It's our most recent high. We're going to need to get above here so that we can hit our bullish price targets. Now, if we get a pullback, which there's a couple of reasons that we might get a pullback, I'll go over that. We need to hold these three levels right here. These are the fib retracement levels, the 38.2, 50%, and 61.8. These are the three most common and most respected retracement levels there are. Nothing moves in a straight line up and nothing moves in a straight line down. You get a move up, retracement, and continuation up higher, or a move down, retracement, continuation lower. Now you can spot a reversal when you break through those three retracement levels, right? So if you have a move up and then you break through those retracement levels, that's how you can spot the reversal. Okay, so that's what we're going to be looking at. Specifically, our three retracement levels are going to be 1.29, 1.18, and then also 1.08. So if we do get some type of a pullback, we still are in a bullish trend if we're able to hold those levels as support. Okay, so if you look, we have a low here, a higher low here. If we get some type of a pullback to our major retracement levels, we're still in line for a higher low on the daily time frame. Now we've also started making higher highs, right? We have a high, higher high here, higher high here. We were in a pattern where we were making lower highs, right? Lower high, lower high, lower high. And then we broke through that and we've actually came above this high and we're battling this previous high over here. Okay, so we're going to see, can we push up and hit these bullish price targets? Now, the reason we may be due for some type of a pullback is because if we look at the relative strength index, the RSI, we are overbought. Okay, so above this dotted line right here is 70. That's the technical definition of overbought. So it does make sense that we've already pulled back some after hitting 1.61, right? So currently we did get a pullback today. Now, if you look exactly where it found support. It found support at our 38.2 retracement level and pushed up higher, which again is 1.29. So this is what we want to see, right? Now it could trade a little bit sideways. It could go a little bit lower, all right, to our other retracement levels before continuing up higher. But keep in mind that we already did get some form of a pullback. Now we're still overbought, but just because we're overbought doesn't mean we can't go higher. Look over here. Over here, we were overbought at this point in time. And look, we still continued up higher. So we're just being cautious at these areas because typically it's not a good idea to buy something when it's overbought because there always is going to be that risk of a pullback, such as the pullback that we most recently have had. But we've gone over the major levels. Now, if we break through these levels, it's going to look something like this, right? We're going to come down to these levels. We're going to get some type of a bounce and then ultimately break through. That would give us an ABC down. All right. That's a possibility. And we could come back down to test some of these prior highs that we had, right? This little range right here could be where we go if we end up breaking ultimately the 61.8 retracement, which is 1.0862. But until then, everything looks good. Now, to spot a reversal or spot a crash, what we're going to do is zoom in on the MACD, and the MACD is very, very useful for this. Okay, so if you take a look, this blue line here is going to be your entry or exit signal. When it crosses below the orange line, that's going to be an exit signal, right? So if you look here, we got an exit signal and then a big move to the downside. Same thing over here. We see the blue line above, and then it crosses below. We got an exit signal right around here, and then we had that large move to the downside. So we want to see the MACD continue to stay in an upwards direction, and we want to see this blue line hover above the orange line. If it gets that crossed below the orange line, that could be another potential exit signal, and it could play out previously how it's done, where we get those sharp moves to the downside both times, okay? And the MACD is one of my favorite indicators to look for in a bear market for exit signals, because, you know, it's a really good leading indicator. And a lot of times, you know, it works very well for entries and exits. So, you know, if you're riding momentum on this play, there's two scenarios that you can do to look for a sell. Okay, you can wait and see if we break through our major retracement levels to the downside. If we break through those, it's a possibility we're going to come back down and retest our lows. Or you can look for the MACD sell signal and see if this blue line crosses below the orange line. And if you see that, you can also sell your position. But until then, you know, this is some nice, healthy consolidation. Okay, we've had the strong move to the upside. We're starting to consolidate a little bit, but we've already bounced off of our 38.2. So technically, we could have had the pullback already and be continuing up higher. Now, keep in mind, everything in between here is really going to be noise, okay? Everything between all of these levels is going to be noise. If you're looking for new entries on this, okay, what you want to do is you want to see if we're going to get a breakout above our breakout level 1.61, okay? And if we get above there, then we have our bullish price targets of 1.80 and 2. And then if we break below our major support levels, then you can look to try to take a trade to the downside. You know, again, being 1.0862 is going to be our major support level. But for now, things are looking very bullish. Any type of a pullback where we make a higher low is just healthy and normal. Again, nothing moves a straight line up or straight line down. As you can see here, we moved up, we retraced, moved up higher. Okay, so it would make sense if we get some type of pullback to ultimately go higher. These are the three levels to watch out for. If we break through those, we're going to get some form of a reversal. And above 1.612, we have the possibility of hitting our bullish price targets above our breakout level. So keep an eye on the MACD. Okay, you want to see the relative strength index get back below 70, so that way it's not overbought and it's easier to push back up. But just because it's overbought and, you know, you're expecting some type of pullback on the RSI, it doesn't mean that this can't go higher. It just means that this is, you know, the technical definition of overbought. And it's time to be a little bit cautious if you're trying to get into the play and FOMO into it after missing this very nice rally upwards that it's had. So that's it for today's video. Appreciate you watching. Smash the like button, subscribe to the channel if you're new, and if you made it this far in the video, I think you're really going to enjoy one of these next two videos as well, so make sure to click on those.